Welcome back. Doing this special show on the eve of N Chandrasekaran deciding to step down when its tenure gets over in February 2027. We're now joining us Ajay Srivastava, MD Dimensions Corporate Finance. Ajay, we want to discuss with you the market impact of this big transition that's going to happen with India's biggest industrial group. But before that, let's look at how some of the Tata companies have performed over the last 8 to 9 years. And Ashesha joins us with that.
Yes, first up, let's talk about Tata Motors and the turnaround we have seen in JLR over the last few years. It was acquired in FY19 when it was incurring losses to the tune of about 3.6 euros. Now remember, flashback to FY25 where it has reported record profitability, net cash and best ever margins in the history of the company. In fact, the target for FY29 that Tata Group has set for JLR is to become net debt free and 5 lakh crore Indian rupees of revenue for FY29. So that's as far as JLR is concerned. Let's also put the spotlight on a couple of other companies and the kind of transformation that we have seen under N Chandra's leadership. And let's talk about a Tata Consumer in that case, where it was earlier largely a broader FMCG platform, but now the company is focusing on debt reduction. It is also focusing on India operations as far as Tata Steel is concerned. They've expanded Tata Consumer Products, Tata Steel is doing good. Of course, Europe continues to remain a concern for Tata Steel, but otherwise, deleveraging continues to remain a key focus area. Let's also talk about group restructuring. Remember, Tata Motors, CV and PV was demerged last year. That was a big group level restructuring that we had seen. Tata Capital IPO in 2025 was another big trigger for the entire group. And other than that, they've also forayed into semiconductors with a total investment of about 1.2 lakh crore rupees. And they've also entered into several other new businesses over the last few years, whether it is semiconductors, iPhone manufacturing in India, and so on and so forth. Let's also talk about Air India then. Remember, it was originally founded by Tata Group earlier in the 1980s. In 2021, Tata again won the bid for Air India. In 2022, Tata Group completed the takeover of Air India, but reported losses in 2026 stood at about 22,000 crores. So the turnaround for Air India clearly has been slower than what the street was working with. The crash that happened last year in June exposes operational challenges and the reputational risk that Air India faces even today after being reacquired by Tata Group. So the turnaround clearly has been slow, and the group and Air India in particular continues to incur losses despite the turnaround that the company has been doing. Let's also talk about a couple of other ventures then, and let's start with Tata Digital. About 5,000 crore of loss is what it incurred in FY26. Losses continue to widen. It continues to burn cash as far as Tata Digital is concerned. Remember, a Tata new app, that was another app that was in the works. A lot of investment was being done for that, but there is no clear path to profitability, and thousands of crores were being invested on Big Basket, Tata One MG, and Chroma. So these were some of the misses under N Chandra's tenure over the last nearly 7 to 8 years of him being the chairperson of Tata Sons.
Thanks, Ashesha, for that update. Ajay, how do you look at this transition? Is it going to be a little more chaotic, in your opinion, from a market's point of view, and the markets will be watching out for who will be the next successor of N Chandra?
I think markets, companies will continue to perform, and they will reward what is the fundamental performance. I don't think so it's going to be a great difference to a shareholder of a Tata Steel or a Tata Motors or a Tata Consumer to say that there's a elevation, a change in the Tata Sons. Because at the end of the day, I think change is always good. And now that we have a person who is going to go out in 2027, no new person is there. Each of the MDs of the companies will be far more flexible, far more independent, and they will do a much better job. I think it's going to be, if you ask me personally, change is good. Gentlemen had done a decent job for Tata. There are pluses and minuses like all of us. Lots of minuses because, and I'll come to that I think it's a great thing because he's very good. You should not say anything bad, but the fact is, today Tata Group is positioned in all these smokestack industries all the old versions. In the new age, they have been found wanting completely. They were in telecom, they're no one. They paid from 50,000 crore compensation, they are nowhere in telecom. They're nowhere in infrastructure at this point of time. They're nowhere in digital space. They're nowhere in, in the retail space. They wanted to get into quick service and so on and so forth. They are not in that space. They're not in semiconductors. So at the end of the day, if you look at the positioning of the group today, it's heavily skewed towards a Titan, a Trent at this point of time, two successful, very successful ventures. Tata Consumer, little bit. Rest are all mediocre. Look at other steel companies that have gone way ahead. Look at other commodity companies gone way ahead. So I think, let's put it this way. I think this will give a lot of chance to the MDs of each of the companies to go and show what they can do without the meddlesome on the top layer of the company. So, and I think it's going to be great, to my mind, a great positive for all the listed players in the market, because they'll get some freedom till a new person comes in, put some controls. For 2 to 3 years, I think freedom is there for all the listed companies, and they will do a lot better. And I can promise you that much.
Well, yeah, absolutely. I mean, it's not like this script has not played out with many other groups before. But Ajay, what will make the street happy? An insider, getting the bump up, or someone completely anew that the group now entrusts with the chairmanship?
I think what will make the street happy is not that insider versus outside. If it's an insider, it's fine. There's no problem at all. I think the key issue is, will they let the new person let the companies perform, or will they run these companies for milking them for dividends? Because that's the major difference. Because if you let these companies perform and independently, and that is where the failure has been. So if you look at Tata's, they started so many new activities, in the digital space, semiconductor, retail, but they never raised money. They raised money only in one small company called Tata Capital, which is one of the smallest NBFCs equivalent in the country by and large today. The whole equity boom passed them by. They never raised any money. So when they want to fund an airline, or when they want to fund a semiconductor, digital, whatever it is, it was down to get the dividend out from the operating companies. I think if the new person comes in, has more orientation towards capital market, raises money from outside rather than just milking dividends, I think you'll find our companies doing very well. So it's not about insider outsider. The philosophy of milking for dividends versus letting companies grow with the money they have, I think that will change the dynamics for the companies and for the shareholders of the companies. So insider outsider not relevant. Relevant is, will you still milk me for dividends, or let me grow at my own pace?
Ajay, we were discussing this question with Sohail Said as well earlier, who is a long-time Tata trustee. The group is sort of mid-flight, if you will, on semiconductors. That flight has just about taken off for them. EVs, aviation, and of course, Air India's turnaround, which is sort of, long in the waiting. All Chandra-led bets, if I can call them that. How much continuity risk does this leadership vacuum for now create for those projects in the very near term?
See, I think there will be re-evaluation. Of course, there has to be, because you can't run them the way you're running them today. It's impossible. You can't fund them the way you are funding it today. That's impossible. So there will be a re-evaluation. And I think that's, again, I said, more sense will prevail, because, when legacy moves out, you have freedom to explore options. You're not in the defensive game. Why I set it up? What were the expectations? What is the, what were we supposed to achieve? How are we going to fund it? I think it's a blank slate for the management, for the board at this point of time, and say, okay, guys, we are here. We have no legacy left. Gentleman who set it up has moved or will move on. How do we position ourselves for the future? Where do we raise the money? So I think there will be evaluation, and I think some of the ventures, perhaps, if they can, they will definitely get rid of this big basket retail kind of stuff, because they're far too small, and they don't have the appetite or the money to fund it. But I think semiconductors, Air India is there for them. Nobody's going to take them off their hands. They need to run it at the end of the day. With great difficulty, the government of India gave it to them. Now nobody's going to buy that from them. So I think Air India is a given. All other ventures, I think, will be up for review. But I think the most likely, which will be an exit point, could be the retail part of it, because semiconductors is something that they would like to go in, and the rest of the businesses are just too small to even make a difference.
What is your view on the contentious issue of listing of Tata Sons? Is that something you think could happen from a street point of view? And if that happens, how does this change the dynamics?
Oh, it changes dramatically. I think a listing changes dramatic dynamics because the responsibility, the performance, the board, decision making, everything's thrown open. Because if you got a family promoter chairman, you'll have to have independent directors on the board. You'll have much more transparency of decision making. I think this whole fiasco and all the last 2 years thing which happened wouldn't have happened if it was a listed company. In the public domain, information being shared, the resolutions being passed, related party transactions being flagged out. I think, fundamentally, it's a great thing for even the capital markets, for the shareholders, to have a listed Tata Sons so it's transparent, and therefore it is very easy for it to be governed and people to interpret. But whether it's good for the promoters at this point of time, I doubt it, because they would like to keep it inside the system so they don't have to explain every decision to anybody. How do they allocate capital? How do they use the dividend? What do they do internally? Who gets what? And number three, most important, I think, is that once you're a listed company, your ability to influence your subsidiaries also changes quite substantially, because then if all in listed space, you are controlled by SEBI, disclosures, MIS, and all kind of norms, and therefore the governance pattern will change dramatically. For the shareholders, I'm telling you, for Tata Company shareholders, it's the best thing if Tata Sons is listed. It's the greatest thing to happen. Maybe not for promoters. So I wish it gets listed. We have one more share to invest in, which is good quality, put all Tata companies and you can invest in them. And it's going to be great for the listed companies because the transparency will change dramatically. Capital allocation model will change. So I think it'll be a great thing if it is listed. I hope it is listed. And, the era of closed door, family owned holding companies taking private decisions is over. You can extend it for one couple of more years, but sooner or later it has to be listed. And if government insists on it, it'll be a wonderful decision.
Very quickly, while of course the reaction today was only exaggerated on a TCS, but other than that, if these stocks from the Tata Group companies were to fall further, which one would you buy?
I just told you I don't buy smokestack industry stocks. I'm done with them. It's over and done. But I think broadly speaking, I think the fact remains that irrespective of the change, you saw how the two flagship stocks, the one Titan has performed. Everybody has seen how it performed. It's a great story. It's a great business and they built it up very nicely. So it's not about, just which one would you buy. I think I would say as a cohort, all of them would do well in the present scenario because the new guy has to bring energy in the system and says, sort out Europe in Tata Steel, sort out the growth issues, get this. You are in Tata's EV, they have got left behind in the EV space, they're not there, ancillary, they're not there. If you look at, just look back and says, which are the groups, industries India has done great with and Tata is not there, you'll find out they're not in pharmaceuticals, they're not in CDMO, they're not in digital space, they're not in automobile ancillaries, whole host of places where India has done phenomenally well, they're not there. But having said that, it was a great correction. I think Tata companies, as we said, corrections are always good to buy fundamental companies. Companies are good. Management will change, things will change. And 5 years back, you look back and says, life was good, change is good.
Yeah, change is always good. Ajay Srivastava, thank you so much for joining in today. Great speaking.